just quickly run through the other basic controls that we normally have. So we're not going to spend too much time on this. So normally the basic controls for receiving are that quantity should be matched with the quotation list, income, and PO. So usually the process is the steward is or the chef in the office is creating a daily market list, and then purchase order is issued based on that by purchasing, and then when the goods are delivered there is an invoice from the supplier, right? So that's a general process. So the physical goods have to match with all the three. So ideally the PO has to match with the quotation list, or the market list, and the invoice that the supplier is giving also need to tally with the invoice with the PO, especially in terms of price and the specifications. Quantities sometimes are not exactly matching because it's a market order list and you are buying fresh vegetables, let's say. So instead of 1 kilo, it can be 1 kilo 50 grams, or 1 kilo 100 grams, or 980 grams, so something like this. Usually there is a difference between the invoice and the physical goods compared to the PO. So they are not always 100% accurate, right? Unless you are buying packets. So it's one packet is one packet. You cannot deliver 1.2 packets. So usually the hotels have a tolerance limit, up to 5% we can accept plus or minus, up to 10% we can accept plus minus. So the hotel has usually a standard on this, so we have to look at what is the real standard, and of the tolerance limit. And normally the receiving staff knows about it, and they have the authority to accept or reject the order based on that, right? So but we cannot check all the items normally. So normally we spot check the items, especially at the time of receiving, because it's very busy during the time of receiving. But you tally the basic details that your actual delivery is in line with the invoice, and then after that, once you are posting into the invoice, then you normally know if there is a difference in price or difference in the quantities that we order, and then you negotiate with the supplier later. If you have the PO handy with you, you can spot check and compare, especially for big ticket items, and based on normally the difference, because there are usually regular differences on certain items, so you can figure out those items only. Uh, to monitor with the PO. Right, the responsibility of check lies with the both the cost controller, receiving staff, and also the department. So for mostly we are receiving the housekeeping items, food items, and beverage items. So the chef or the housekeepers, they are usually present when we are receiving those goods. So usually we have a standard receiving times in the hotel when we are going to receive certain items, and then those departments have to present at that point of time to check the quality of the product. And there are specific processes to share what if the standards are not met, right? Are we going to accept the order, or we are going to reject the order? If we are going to accept the order, are we going to negotiate the price again? Because if the quality does not match, you can negotiate, we can still accept with the supplier, but you can negotiate for a lower price or for a discount or a credit note from the supplier. So that decision usually lies with the department head and the purchasing manager, to make sure that we have proper control on this and we are able to claim the right credits if we need it, right? So that's the basic one step. And then the quality of the item is need to conform to the established standards or purchase specifications for that particular item, and that's the responsibility of the department head to check. So the chef who is responsible to come and check, they have to make sure that um, is in line with what they want, and the receiving staff is also checking about the color, about the grade, about the brand, so that just to make sure that what we are receiving is in line, right? The price has to be same as those which are prepared in the market quotation list. Now, sometimes market quotation list is made in advance, and the steward or the chef does not have an idea of what are the current market prices, right? So usually when the purchase is checking the price market list, then they adjust the prices based on the current market prices, or based on if we have never buy them, then usually the chef will put just an estimate price. So the better way is to match against the PO, not with the standard quotation list. Right. So that's the basic receiving control. So there's not much of the controls there. From accounting perspective, the major risk arise when you are not posting the receiving on a daily basis. If you have a backlog of receiving items, right? So you get because you're not posting immediately, right? When you are receiving on the during the day, and you receiving, let's say, 100 invoices during the day. So the next step is obviously to go into the system and punch all these invoices as received against the PO. And that usually goes into your accounts payable section to to pay the invoices, right? And then the receiving staff is usually making a batch of those invoices what they have received, at attach the PO, attach the delivery notes and the invoices, and pass on to the accounts payable department to cross check and pass the entries in the GL based on the accounts payable record. So if this is not done daily, you usually will not be able to process the payments as well in time. So that's the important aspect of the receiving. Uh, it's a small aspect, but it's a very important aspect, that all the invoices that we are receiving has to be posted on a daily basis, so that we are able to create the batches for payment in time, right? So that's this is the financial aspect of it. Then in receiving, usually we verify the quantity, price of each item as per the PO, and then acknowledge the by stamping the invoice. Now, this is again an important aspect. Usually the receiving has to stamp every single invoice what they are receiving, so that there is no bypassing of the process, that there may be no PO, or there may be a direct receive by the department, and the invoice is directly passed on to the accounts payable department for paying the invoices, right? So that should not be happening, because otherwise, if the item is not stamped by the receiving department, it means that it has not been received. Now, what will happen when the receiving department is off duty, let's say on Saturday and Sunday? Usually, the security department will be receiving those items, because the department is always on, right? Hotel is 24/7. You sometimes need things immediately. So usually, the night manager and the security head is the one who gonna approve that yes, these items has been received, in absence of the the receiving staff. And then normally the receiving staff will list all the invoices in their daily report and pass on to the paperwork to the accounts payable department. And before that, it has to be checked by the cost controller, cross-checked by the cost controller, and then it has to be passed on to the finance department for processing, right? And then you are going to move all those, and alongside you're gonna move all these items into the either going to directly to the kitchen, or going to the store department, where store department will again use those invoices to make an entry of receipt in the stores. So that's the general process of accounts. Once you receive the items, so then you have to issue it to the department. Those items which are issued directly to the department means they are not passing through the store. They are always issued out from the system immediately. So you receive it and then you issue out. So that means that there is no inventory of those things, right? So only those items which are keep in the store, you have to raise an indent. The department has to raise an indent to get those items from the store and get and to the expenses, right? So usually what happens is the store department, the store softwares are in line attached to the accounting software, so that whenever you are issuing out the items, the the expense is booked based on the department which you are who is raising, and also the item. So every item is going to be marked that which expense line it will be going into, right? So whenever, let's say, housekeeping department is raising an indent to draw the tissue paper, it will go into the operating equipments. So that's usually the process for accounting from the store. If the systems are not aligned together, means they are not interfaced, then obviously you have no other choice but to put these entries one by one, right? So in that case, usually you cannot put the in the GL, you cannot put each and every single item which you are issuing. So what you do normally is you take a summary of what are the items issued by the from the store. You normally you can get the summary of the all the issues, and then you figure out, okay, this item is going to this expense, this item is going to that expense. Normally chief accountants have predefined account codes based on the item code, and then they just have to fill in how much quantity has been issued, what has been the price of that item, and then the JV is ready, right? So but you are not actually putting into the system what are the items, exact items. If you have a import system into the accounting software, you can input each and every single item, because you just have to use the Excel to create automated journal vouchers, and then you can put into the system each and every single item and the quantity, so that the user department can get a control of what they have been requesting and what has been the expense. If not, and you are putting up the gross entries or consolidated entries, then the issue reports are attached together with the general ledger, so that the departments can get analyze what has been their expenses. Otherwise, from looking at the GL, you will get no idea, right? So usually we used to post like consolidated entries. If we Venki knows, Shangila used WinAC system, which was not linked with the inventory control. So normally what will happen is at the end of the month there will be a one big entry of, let's say, $2,000 of the guest amenities into the guest amenity store. Now, looking at the GL, you have no idea what those items were. Were they more on comps? They more on the shampoo? They were more on what kind of exact items they were there. So for that, you need to go back and look at the issue reports to analyze the GL. So that's an overall process of the store, and sometimes the challenges in recording the issues from the store into the GL. Is that right, Venki?
Yes, sir. But we have come with a system where
Mm,
we used to put a description
mm,
like high high consumption item only,
mm, mm,
high value items, like
mm.
for example in amenities like toothbrush or soap.
Yeah. So
Yeah,
basically, you
that.
can split the items, split the entries for most common items. What is the quantity
Yes,
and what was the value? So this
yes.
way, the department can get more details. But still, departments will still need the issue report, because they will not be able to get 100% details, right?
Yeah, mainly when there's a PNL meeting, department asks the
Hmm.
details.
Hmm.
Yeah, what is my
So
expense?
yeah,
Yeah.
that's the normal issue. But if,
Yes.
let's say, the you have your accounting system and the store issue system is same system, then you can even put the single issue also, even every issue from the store to the GL even on the date of issue out. So you don't really have to wait for the month end. You can issue out on a daily basis what has been issued, and expense it out immediately into the GL. So that's the benefit of connected systems. But in case the systems are not connected, that's usually a challenge which you will face from the departments when they are doing a P&L meeting, because from looking at the GL, they don't get much details. So
Sir, in that case, sir, in that case, the ledger will be very long.
yes, otherwise if you put the, yeah, that's true. The ledger is very long in if we put everything into the ledger. So that also have to be taken care of. Um, Otherwise the departments will get a lot of pages of GL, and they
Yeah.
also will not be able to analyze that in super detail. So
Yes,
yeah,
sir.
issue reports are so the it's important for the inventory software to give the trends analysis, right? Okay, last month what did you issue? This month what did you issue? Or over last 6 months, every month what you have been issuing that is going to your expense, so that the departments find it easy to explain. Okay, this is what I issue. This is why I get it issued, right? So that's one of the things that sometimes the department heads don't know how to explain. So they ask for details, and the chief accountant has to provide them these details, even though they can look at the inventory software, but they are not really that tech savvy. So that's why the chief accountant need to know where to get the details. Okay. Apart from this,
And also we have implemented every month each department month wise. We used to send every monthly basis to them.
hmm, hmm, hmm. Yeah. So the store department is also the details so that they can look at their own expenses every single month. Yeah. So there are best practices. So these are the best practices usually we follow, so that the department does not complain they don't get the details, or they don't look at the finance to explain. So apart from these accounting issues, the store other there are some other controls from the stores department to control the breakages, spillages, or the losses. So basically, the first control is the condition of the facility and equipment. So usually there are standards, HACCP standards that or the company hotel standard, that how the store department would be structured. What would be the lighting, the gap from the walls, gap from the floor, gap from the ceilings, gap between the shelf, what will be the shelf material, what is the gap between the each shelf, how high they would be, and how you're going to store that. Do you have a bin card attached to every shelf? So these are usual the standard that there are pretty much standards defined by hotels, and they are followed all around the world, um, on the standards, right? Then there's usually a arrangement of food, so you have to always arrange first in, so that last in first in first out method. So the new addition to the item should be kept in the behind. What should be the temperature of this food? Do you gonna have a chiller or a freezer? And how long you will keep it? What kind of labeling you need for the storage? So those are all these typical standards that you will find everywhere. You can just do a simple Google search and you will be able to get the standards. Um, and the location of facilities, where are they, how far are they from the office, from the production units, and how you are going to transport them, right? When are you going to issue them? So and what is the security of the storage areas? What are the locking system? Who can access it after office hours? So those are the general procedures of the store controls that usually you have to keep in mind when you are setting up the stores department. Okay. So normally the condition of the storage facility is that there has to be a hygiene for safety standards. They have to not checked regularly. Then there are storage containers. So you have to, there are standards like, are you going to use the plastic? There should not be any cardboard or styrofoams to avoid cross contamination. Shelving, usually there is a 1 feet difference from the wall and the roof. The temperature are 34 degrees to 36 degree Fahrenheit, or 1 to 2 degrees Celsius for fresh food, and 30 to 34 for fresh fish, or frozen is -12 to -18. So that's a very basic standard for a general storage facility. So you may have a more detailed guidelines for storage. Usually the stores issue are not immediately based on any that anybody can come and get it, right? So usually you have to have an indent which has to be approved by the department head so that they can take the responsibility of that issue, and because it's going to hit their P&L, right? um, and then usually once you have issued based on the department head approval, you just have to issue the update the bin card and in manual or in the system and plan for a reorder. So that's the very basic, very simple process for issues, nothing, not much complications, right? But there are usually the transfer from food to, but this is done by cost controller. So as we were discussing last few weeks that there are food and beverage revenue, right? So there are non-alcoholic beverage revenue is supposed to be food revenue, but many hotels are recording as a beverage revenue. And the reason normally is that non-alcoholic beverages, majority of the ingredients come from the food, fruits, milk. Those we are normally buying as a food item, right, for the kitchen, and they are also taken by the beverages. If you don't have separate a big bar to order the things directly from the store, the outlet normally will be taking it, and everything is going to be charged to the food cost. Now that's why every time you have to you are issuing these items, whenever based on the menu consumption, based on the recipe, you have to transfer the cost from food to beverage, or sometimes from beverage to food for wines to be used in cooking and other kind of things, right? And then transfer from one kitchen to another kitchen. For these two things, usually and these are going to affect the food cost of each and every outlet separately. If you are having an outlet P&L, the food cost is going to be different. The cost of food and cost of beverage will also be not correct if we are not doing this transfer. So usually what happens is, um, who need to keep the responsibility of this? Who is going to keep the records? Who knows best what has been transferred? Is it the finance staff or the chef or barman?
It's a finance staff, sir.
No, is
Cost controller.
the barman or the chef. They knows that what has been used in beverage in the bar, or what food is updated, that what they are taking from the kitchen to bar, or what they are taking from one kitchen to another kitchen. Because normally, let's say you issue out item for Chinese kitchen, but there is a order in Japanese kitchen and the same ingredient is needed. Store is closed. So what you go? You go into the Chinese kitchen and take the items. Now, if you don't record it immediately, where the cost will go? The cost will go into the Chinese kitchen, right? And the benefit will gonna be, and the revenue will go where? Revenue will go in
Japanese kitchen.
Japanese restaurant. So
Yeah.
the cost is going to be unmatched, right? Because the where the you are recording the revenue, the cost is not there. So ideally, the chef has to make these records, from transfer from one kitchen to another kitchen and transfer from kitchen to bar. So so they have to ensure that they are updating the records on a daily basis and sending it to the cost controller. And then cost controller will keep these entries into their daily cost board, so that the cost has is being updated on a timely basis. So that's usually a requirement for the to maintain the better cost. Now, so if let's say so this is one of the areas where many times the even sometimes the cost controller is not able to do much, because if there is no record, they will also not be able to do much, right? So based on when you are entering the transaction into the system, you have to make sure that the costs are in line with the standards, or if there is anything that one outlet is overall is very high and another outlet is very low, so it means definitely there is has been some transfers which are not recorded. So you have to find that out. If there is a record, you can do it. Otherwise, where you can get the details if you don't have any, if the chef is not making any record, is there any report which you can use, you know?
Sorry, sir.
If let's say you find out that there is some transfer which are missing and there is no record of it, so how would you know how much amount you should be transferring? Based on what?
So basically, chef in the system they put usually.
But let's say chef didn't make any system, or they didn't record it, then
So it will be very difficult to trace, sir.
yeah. So but there is a report, right? You can use menu engineering report for that purpose to get the potential cost for both the outlets and see what is the difference between the actual cost and potential cost. So first thing is gonna be that you're gonna measure the overall cost, whether overall cost is in line with the potential cost or not. If yes, then it's easy. Then you get the proportion of cost between the two outlets based on their potential, based on their menu engineering report. And then you will be able to do an internal adjustment of the transfers, and then you just have to update the chef that they have to maintain the records properly. Otherwise, every time there will be problems, correct? So you can still figure out how to do these entries based on the potential food cost report or based on the menu engineering reports. Okay, so we have discussed the all up to until now. We are going to discuss the the kitchen controls and selling controls, right? So in the kitchen controls, usually we have to have a standard portion size. So that's the one control. Second control, usually they have for controlling the food is standard recipe, right? So there is a standard portion size, there is a standard recipe to it to make that, and then there are standard portion cost. So based on the average prices that they have decided, there is a portion cost. So it's the standard portion cost is going to be a combination of one and two, standard portion size and standard recipes. Once you have these two, the standard portion cost is just a calculation, right? So usually the cost controller is to ensure that the first two are done properly. That's the important time. So the first thing is the recipe card, where you will get both the portion and also the recipe. So this is a sample of recipe card, which you can see. Recipe number one for antipasto mistromere, right? How is it made? So basically, you have a, portion. So how much is that portion? That's for one packs, right? So that and then in one packs, what is the portion? So you have 100 grams, 100 grams pink prawns, 100 grams sea bass, 100 grams of flower prawn, 150 grams for octopus, some olive oil, some red chili salad, some rocket salad, some tomato, some onion, and two lime. So there is a spelling mistake. And then the total, you add 25% for the wastages, but this is not this is not a ideal way of doing the standard costing, but this is just a sample of standard costing. So this addition of 25% is to add the wastages. So it's a hypothetical figure. Don't assume that we allow 25% wastage, and 15% is added to counter the changes in the price, because the price of tomato, rocket salad, olive oil is not going to remain same for every time, right? It's going to change. Pink prawns, sea bass, or flower prawn, during the high demand, the price generally increase. So you have to keep some margin on that. So this 15% is for that purpose, to keep the margin of the changes in the prices. So this normally you have to, this is a 15%, is just an ad hoc item. You can decide what you want to use. You can use 5%, you can use 10%. Wastage usually we allow only up to a certain point. And this cost here, what you see is going to be the net yield. So now there is a the pink prawns, you are going to get the pink prawns but the prawn come with the head and tail, right? So if in this recipe you are going to use without head and without tails, so what you're going to do, this 100 grams is going to be the net, right? So the cost is, unit cost is the net yield cost, not the purchase price. So you have to remember that. It's a very important thing. Many of the peoples don't get it right. So this cost is going to be the yield cost, not the purchase price. The other way to build it is you can put the purchase price here, and then you can input one factor for yield. How much is the real yield of this pink prawns into this dish? And then you can factor in the cost based on the yield ratio. Okay. Any question on this?
So all clear.
Okay.
Clear, sir.
So the important factors to look into this recipe card is that you are accounting for the yield of product, means individual ingredients you have a different yield. Now the yields are different for each type of product. So sometimes you make a prawn curry, you don't need to remove anything. So everything is goes into the dish, right? Sea bass, sometimes you don't, sometimes you remove you fillet that. Sometimes there is only the fillet, and then sometimes you use the sea bass for full, including the bones. So the yield is going to be different for each product. So you have to come up with the yield for each type or each recipe separately, and then use that, right? So it's not going to be that standard yield you can use. And yields usually change over a period of time because of there is a staff turnover, because there is maybe a change in the supplier, because there may be a change in the quality of the product. So the cost controllers are usually checking the yield on a spot check every month, certain items, so that they can make sure the yield is consistent. And if there is a difference, normally they have to bring it up to the chef and purchasing manager to inform them, right? Then apart from the yield, that yield is from what you get as a raw material, what you are able to use in the production. But there is sometimes a wastage during the production. So some, let's say you are handling a prawn, by chance you drop it on the floor. Now you are not going to use it again, and especially if it gone into the drain, so it's gone waste. So you have to account for the wastage as well during the production. And while setting up the standard prices, you are going to factor the contingency of price increase, like I have built up here in this sample, 15%, right? And the recipe tests are normally the cost controllers are supposed to check the recipe controls every now and then to make sure that the items are made as per the recipe. So there is no extra prawns, there is no extra octopus or extra things right into the recipe, because sometimes the chef want to make the guests happy, so they can increase the ingredients without informing the cost control, which means that as a practice, as a standard, the cost is higher, but the menu price is not changing. So that's usually a loss to the hotel. So that has to be checked all the time. And recipes have to be updated at least once in every 6 months. That's standard in the hospitality industry, minimum. Okay. Apart from this standard recipe of individual items, so these were individual a la carte items, then there's usually a buffet items, right? So sometimes this one you can, these recipes are not eligible for setting up the price of buffet, because in buffet you are doing a different game. So you are not making individual portions, you are making a portion of 10 people or 15 people and put it on the buffet, and then the peoples are eating it. So the way of doing the buffet costing is that you normally have a standard buffet for a fixed number of items, right? So this is the sample that you see on the screen is buffet for 40 people, right? So let's say you know that in a normal of your daily buffet or daily Sunday brunch, or oh, sorry, not a daily Sunday brunch, but weekly Sunday brunch, or in the breakfast you have 40 to 50 people or 100 people. So chefs normally are making the buffet setup for a number of range of people. So it can be up to 20 people, what I will put. From 20 to 40 people, what I will put. From 40 to 60 people, what I'm gonna put, right? So they have to do the costing for all the three types, and then based on their market list. So what they are not doing here for individual recipe, individual item, right? So they are doing it based on the menu. So they make a menu, and then they decide, okay, what would be my market list for this particular menu. So not individual. Sometimes they can do the menu recipe for individual menu what they are putting into the buffet, and then based on the portions, cost control can calculate automatically. Sometimes they don't give individual recipe items for individual buffet items, right? They are giving up all one market list for the entire buffet into once. So they don't really give the individual details. So either way, both ways lead to the same situation where you know the total cost of the buffet, right? And you add the percent, you add the wastage, so you get a total cost, and then based on the total cost you are going to get cost per portion, right? And then based on that you can decide the menu price, and then you will be able to get the cost percentage. Now this is important here to factor again the yield. So you are going to factor again both the yield and the loss and the price increase. But the important factor is that is done based on number of packs. If actual number of packs are not the same, then the actual food cost percentage is going to change. So usually to be able to explain the reasons why our food cost is high or low during the month from a budget, apart from the menu engineering report, there has to be each every cost for each buffet. So normally, the chefs are when they are making the market list for, let's say, the next week buffet or any special occasion, there is a separate P&L so that you can explain what was the cost of those buffet. But if you have a daily buffet, then normally the chefs are making a separate market list for buffets so that they can control the cost of that particular buffet and compare with the income. So it depends on how well we are able to sell, right? So if we are able to sell well, then it's good. So that's why you normally would see that the hotels are issuing the promotions that buy one get one if you come today, if you done today buffet, because the buffet is set up for X number of people already. So if you don't have bookings, all of this is going to be waste. So if it's better to get at least something, right? So that's why you normally get the special offers. Then you again the same concept. You have to account for wastage and leftovers. So now leftovers is another story. Usually, some of these buffet items you can reuse, but you cannot deduct that from the costing. So in a standard costing, you cannot say that I will be able to use, let's say, half of these items next day. So my costing is actually half. No, it's not the right way. The cost will be done still for the full buffet, but the leftover can be used next day to reduce the cost of the next buffet, but not for this particular item. Or you can maybe you can say we are transferring it to the staff kitchen, so the cost need to be transferred to staff kitchen. So in that case also the finance normally don't agree to transfer the cost of the leftover items to staff kitchen, because that increase the cost of staff canteen unnecessary, because the expense items are very expensive for guests. Um, and it gives them an undue advantage that if they can cook extra, they can just send it over to the staff canteen and get the cost reduced. So there is a negative incentive for them to continue producing more and more, right? So they are not going to really control over themselves. So that's why we usually don't credit out the cost of leftover items if they transfer to other outlets or to the buffet, to the breakfast next day, or to the staff canteen. Is that clear?
Yes, sir. Understood.
Yes, sir. But one question, sir.
Yes.
Uh, the hotel will decide how much to be prepared, like in the buffet, like for example,
Yes.
breakfast,
Yes.
or there is a standard.
No, hotel decide.
Okay.
Hotel,
Okay, sir.
the chef decide. The chef and the GM normally decide, and they consult usually the finance department that okay, how much is the allocation, maximum allocation. So that's another thing that is a control point from the finance side is, let's say there is a breakfast allocation of X amount of dollars, right? So let's say in our hotel we allow $6 as a breakfast cost, but it doesn't mean that all $6 has to be gone into the food, right? Because you need staff to produce that buffet and to serve that buffet. So normally we say okay, you can get up to $3 or $4 as allocation for food and beverages. That's your cost per person. Now, based on the expected number of guests who are going to come to eat the buffet, the chef knows how much he can spend in at a max. And then based on that, he decide, okay, what should be the menu. So usually the menu has to be keep in advance. You cannot decide on a daily basis, but there's a rotational menu, and most half of the items usually are repetitive, so that you can especially those which are like dry items and can be used, like for example bread, juices, nuts, cheese platters, those things you can reuse all the time. The hot items are not reused, then so you have to make them based on the number of people. Like now currently we follow a policy that if we have, let's say, only 20 guests in the hotel, 20 or less guests in the hotel, we don't set up the buffet. So we allow the our GMs that less than 10 guests don't set up anything. Ask everybody to be on a la carte. If more than 10 up to 20, you can set up a mini buffet. So means some items on buffet, some items on a la carte. Up to 30, 50, up to 50, 40 packs, you can set up a fair buffet, maybe cold items and everything else. But most items will be on a la minute, especially the hot items, because you cannot reuse hot items. And then if you have more than 50 people or 40 people, then you can go for full buffet, so you don't have to worry about that. So for that, the chef need to know weekly occupancy, estimated occupancy, and how many people are going to eat in the buffet. So like our hotels, 100% of the guests has to eat breakfast because we are charging them. We don't sell the breakfast separately. The guests don't have a choice. But in certain hotels, they sell the room with and without breakfast. So in that case, it's even more difficult for the chef to judge based on the occupancy how many people are going to come and eat the breakfast. But sometimes if you are selling the packages, let's say breakfast inclusive, so they know okay, this is the number of people that are going to come, and then there will be some extra people who have not bought the breakfast package but will still come for breakfast. And sometimes you get outside guests. So that's a judgment that the chef and the F&B director usually has, or F&B manager has to make in order to forecast the number of peoples that are going to eat the breakfast, and then decide how many what they should be ordering and what they should be setting up. Okay. Okay. So the setting up of the price is pretty simple. So once you have all the recipes, normally you just have to define the food cost percentage, what's the budget, and then based on that, you also have to look at the competitor, right? Competitor one, two, three. If you have freestanding restaurants, or if you have other hotels, other competing hotels, you have to look at them and then decide your price based on those competitors. So certain items will be having a high percentage than the budget, and certain items will be having a low percentage than the budget. So then average should be around the budget percentage. So that's usually the process of setting up the prices. So not all items will have the same cost percentage, and the price is set as per the guest expectations and competitor prices, not based on the cost of producing it only. So if you see that the competitor is selling for very cheap item and your cost is more than their selling price, then either you have done the costing wrong or you are using the wrong ingredients. So just to give you an example, in some of our hotels, we were using like imported ingredients like tequila or rum for making the cocktails. So that's why our cost was super high, and we were selling the cocktails for very high price compared to the outside restaurants. So when we figured it out and say, oh, the when we compare with the competitors, and then we saw their selling price is lower than our cost. So then we check what type of ingredients they are using and what kind of ingredients we are using, and then we find out that, oh, we are using imported items. That's why our cost is high. So we change it to the local items, and now we sell in line with the competitor. So that's the important analysis that you have to do. You cannot ignore the competition and the guest expectations. Any question on setting up the prices?
No,
No, sir. All
nothing.
clear.
Okay. Then you have butcher test or yield test as a very simple thing. So as we discussed, sometime in the yield you have a lot of losses, right? So let's say you were buying a beef tenderloin. So in the beef tenderloin, when you are buying from the market, you have a total weight of, let's say, 9 pounds, right? But when you are going to yield that, cut it out, so you get fat of 3 pounds only, and then you lost in the cutting certain percentage. Some you have unusable meat. Now what is this unusable meat? What are you going to do with it? So that you have to decide how what you are going to do. There will be tip meat, or there will be bones, or there will be other things in the ingredient that you have to remove. So the leftover amount, so the total cost is, let's say, $6 per pound, right? So you have to calculate what is the usable portion, and based on the usable portion, you will get the price per pound. And based on that, you will be deciding, based on the cost of each usable item is only 12 pound, based on the 6 divided by the 41.7%, and the portion size is 6 ounce. The portion cost is 4.69, and the cost factor per pound is going to be 2. That's usually the way of doing the yield test. So you have to note down what you are going to throw away, what you are going to use, and factor in the percentage. How much is the loss in the yield? And that percentage you have to keep on checking based on the, if there is a supplier change, if there is a specification change, at least every 6 months as well, so that you know if the yield produced by that particular supplier is in line with our standards and in line with our costing standards, right? If there is a change, then you have to change your recipe cards as well. So this is another example of yield test that we did for another item. Let's say this is chicken whole. So now the raw weight is 10 kilo. Then out of that, we remove the package, we remove the defrost, loss of weight. Then the saleable raw material net weight is only 8 kilo. So means 87%, right? Based on the total. And then after that, you are doing the trimmings, and after that you get the usable portion. How much is the usable? And then based on that, you are going to decide what should be the price. Cost after yield is going to be 3.53, rather than the before that it was 3.1 per dollar for kilogram, and now the cost is changed to 3.53. So that's the easy way to understand that. Right, so it's done. So normally the butcher and yield test is done together with the chef cost control, and you normally have to compare against the stand agreed yield. So if you have a agreement with the supplier that they are going to give us a yield of, let's say, 80%, but now the yield is 87%, so you are happy, right? 87 minus 12. No, 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 it's the same thing. Yeah. So 87 minus 87%, right? So then you have to compare against the standard agreed yield if is more or less. And usually trimming used in alternative ways are not considered because there's no point in doing that. Cost per kilo is derived by the total cost divided by the net usable items, and which we are using in the recipe costing, and it has to be done periodically. So that's the important aspect. Then you have to do the portion control test. So basically, the cost controller has to go into the kitchen and ask, and when they are looking at the portion which is produced by the kitchen, they are just going to measure what was the agreed portion and what is the actual proportion that they are showing. So you have to do it on a spot check basis. You cannot go and inform them that I'm going to come and check, right? So that's the another test. Another test usually you have to do is the spot test, bar spot test. So basically, what you are doing is for beverage items, you also have to do a stock check, spot check. Let's say you have on hand is 100 beer bottles. So the first thing is what we want to do is compare with the sales. So how we compare with the sales? Let's say you compare the last stock was 120 bottles, and then you have issued 50 bottles from still the previous counting. So you should have and then you have 100 bottles at the moment, right? So now you got 120 plus 50, you should have 170 bottles, but you found only 100. So it means 70 should be sell, right, or should be consumed. So now you are going to compare this sale against the sales report and see whether we sell 70 or we sell less or we sell more. There may be some free consumption, there may be some complimentary checks, there can be some consumption by the staff, but all of the item has to be explained. Now the 100 beer bottles are a very easy example. The more difficult example would be the spirits, the hard liquor, which is not sold by bottle or by the which is not sold by bottle but by portion. So by shots, how many shots we are selling, how many tequila shots we are selling. So that again, that creates more problems because it's very hard to measure. And sometimes when you are mixing into the cocktails, then it's even more difficult, right? Because based on the sales, you have to calculate how much of that particular cocktail you have sell. So it's a bit of difficult job for items which are used in other cocktails, but for items which are sold typically in cans or in the bottles, it's easier to do, right? And then also the objective too is to compare against the established par. So how much they should be carrying and how much they are carrying in actual. And also the third objective is to check the storage facilities. Any questions on this or any experience that you want to share, Venki, based on your experience? If you
Yes, sir.
have done any
Uh,
bar spot checks?
yes, I have done a lot of
Mhm.
spot checks, but from income audit side, I used to
Uh-huh.
go and just random check it.
Okay.
And
For
what I
the
have implemented
hmm,
in when I went to Mongolia also,
hmm,
there was no inventory,
hmm,
and I told cost controller and outlet to create a daily inventory bar so
hmm,
that
hmm,
it will be easier for them to this. And also, like I have noticed with spirits,
hmm,
uh, like they display the spirits at times. It contains water also. There is a possibility of fraudulent activity also.
hmm, hmm,
So
hmm,
I have
hmm,
caught one, and they purposely put like damaged cans
hmm,
or
hmm.
yeah, they consider as an inventory.
Yeah, yeah. Well,
Yeah.
that's their trick to fool the checker that is
Yes.
valuable, is usable, but actually is not. So, and
Yes.
sometimes they put their own bottles of even
Own
different
bottle.
brands. So that's
Yes.
usually also a problem. That's why normally there is an outlet sticker. Whenever we issue the bottle from the hotel, we put a sticker, right? so that we can
Yes,
identify that this is actually our bottle or there is another thing.
the best way is to conduct like to maintain a daily inventory, cost control.
Yes,
So
yes.
that is the best control, so that the spot check can be more accurate.
Mm-hmm. Okay,
Yeah.
okay.
And the best for income auditor or for any spot check person, like he is to go randomly and check any items, like mostly the display items.
Mm-hmm. Okay, yes. Okay, so that's the bar spot check, and then you have a menu engineering report that is usually the menu engineering report. Um, So the menu engine report is basically to understand the popularity index, and then so this is production control through the menu engineering report. So basically, what you do is you prepare get a popularity index, how popular is that item, and then forecast the menu sales by day or meal period based on the popularity index, and then you align your order or mise en place with the estimated menu. So, but usually the as I explained earlier also yesterday, the chefs are normally don't do this because they rely on their own judgment based on their experience rather than using the menu engine report and popularity index to forecast the future sales based on the guest. And that creates usually a problem um, with the portion controls and also with the wastage or overstocking of the food in the chillers and the freezers. Because sometimes they just assume that the guest will be ordering something, but which when they don't actually. So there is usually a portion inventory control as well, especially for high value items, let's say steaks or beef tenderloin. So normally the cost controller checks how much we have, how much was the opening stock, what was the issue, what was the purchase during the time, during the month, and then what is left over. So means how many portions are actually used, and then they will go into the menu engineering report and see whether there is enough sale to justify that consumption in the menu engineering report. So we used to find that the beef tenderloins or the higher value item like shark fins are being sold or are being extra given to the guest without charging the prices, because the consumption report does not suggest, or the menu engineering does not suggest that certain portions has been sold, but the consumption report shows that a higher number of portions are sold, especially like simple easy items like suckling pig in Philippines. You take the whole pig and prepare it, right? So then means it's very easy. How many to over pig you buy, how many portions you sell is a clear item, and you are not using that for anything else basically. Duck, or the whole duck, as again is another example in Chinese dishes. So there are certain items which are easy to track. Uh, General item like beef, chicken, fish, they are very difficult because they use them in multiple dishes, right? So sometimes the cost controller take a pain to check the controls, especially when the food cost is very high and there is no other explanation to it. So then especially then the production controls or the portion controls are very very important. Okay, and then finally you measure the results. So how you measure the results? You normally do the monthly inventory taking. You value the inventory based on the company policy, but possibly most of the companies now are using the weighted average cost of method. And then you prepare the monthly food cost board and reconciliation for transfer, complementary breakages towards sales and any other items, right? And then you use the and then you take the inventory, check the inventory from not only from the finance store but also from the consumption report or from the floor report to check about the slow and non-moving inventory reports. So basically you check what items have not been issued in last 6 months, what items has not been issued in last 3 months. So the more than 3 months is the slow moving and more than 6 months is the non-moving stuff. And then you normally exclude the machine spares because they are there for keeping for a long time. So you don't normally have to include them in the non-moving stocks. So basically, you have to identify what are the reasons for slow movement. Are they not in standard, or there is a low business, or what's the story, and how are they being stored, basically. So that you can make sure they are not getting damaged, and especially near the items near the expiry items, so that you can create some promotions with the chef and with the directors, and see how you can use it, sell it to the staff at cost, or use in the canteen, or issue out to the use in the parties, or conduct some staff appreciation parties and use up there. So there are many ways that those can be used, right? So that's depends on the hotel. And then usually you have in the hotels you have daily food cost control or monthly food cost controls. So daily is a very summarized way, and only direct or store issues are considered. You know, just to give you a broad idea of what the overall food cost as of now it is. So today, what is the food cost? Month to date, what is the food cost? So that the chef can make a decision to control it for the end of the month. So the monthly food cost board is very detailed. It includes all the transfer, breakages, everything else, and include all factors for the calculation. So the your used by the staff, entertainments, staff meals, and everything else is used in the monthly food cost reports, not in the daily, but in monthly one. Okay, so that's an example of the monthly cost board reconciliation. So I think I have included the templates of these into the course resources, so you should be able to download that. If you don't find it, just let me know. I will see, or maybe I will move that to some other location. Okay. So are we taking all the stock taking, or the stock taking all the items, or only some items? What is the story? You take all the stock inventory taking of all the items, or only some? Venki? Lost. Hello? Hello? Where did you last
It's
me, guys?
the daily to monthly screen.
Okay. So that's not very far. So daily to monthly screen, as I was explaining, that daily is just only a summarized version, but monthly is more detailed for accounting purposes. So daily cost board is not used for accounting; it's just for food cost control, to give an idea of um, how we are going to have this food cost at the end of this month, so that the chef and cost controllers can control the food cost immediately. So that's the purpose of the daily. But the monthly is more detailed and is a historic thing, and used for accounting purposes, for transferring the cost to GS and cost to different outlets, calculating the cost of sales and everything else. This is a format of monthly cost board reconciliation. So it's more detailed. What was your opening balance? What's the food cost transfer to the bar? What's the closing stock? What has been the consumption? And then out of that, what are the credits? Office meals, entertainment, drinks, any parties, any special use, and then finally the net cost of sales. And then you compare this against the revenue to calculate what is the cost of sale percentage. So it's a more detailed way to calculate the cost, right? This is again another example of the calculations by the different kitchen. So separate outlet, so that because there are sometimes not only one kitchen, there are multiple kitchens. So you have transfer in and out from different kitchens, right? So that's why this another sample is shown. So usually we don't take the stock of all the items, only the high value items, especially in the kitchen. if you go and take the stock of every single item, that's difficult to control, right? So because there can be multiple items, so we don't check each and every item. We just only they check the certain items, some items only. And then you have proper kitchen transfer documentation is important. Otherwise, the cost will not be able to transfer from one kitchen to another kitchen, and it will not be correct. Then non-chargeable items is important to record. So systems usually give you the entertainment, the maison checks, or the staff use checks, and then you normally take an average food cost, and then use that same average food cost to transfer. So you ideally the maison checks, the non-chargeable check should not be impacting the cost percentage of the month. So normally you calculate first without this without this entertainment checks, and adding the full value of the checks to the sales, and then you calculate the percentage, and then you transfer out the based on that percentage to from the cost, right? Rather than calculating the cost on a standard basis. Many hotels follow a fixed percentage, but that's normally not a good idea, because in case the costs are very high in certain items, you transfer less amount, and if the costs are very low on those items, you transfer very high amount. So make the cost even more lower. Bar to food transfer again is usually a challenge because of the lack of records. And then after this, finally, you have to compare this against the potential cost of every item. As I was explaining earlier, you have menu engineering report based on which you can judge or estimate how much should be the cost of sales based on the menu items that you are selling. And then if there are open items or there are any buffets, you know separate cost for them, and you can add it to their potential cost, and then compare against the actual cost. Usually I mean the hotel standards is to accept plus minus 5% difference between the potential cost and actual cost. If they are more, usually the cost controller and chef are expected to explain the differences, why the actual cost is higher or lower than the potential cost, maybe based on the difference in the prices, maybe difference in the portions, maybe there is any higher spillage or something. But whatever is that, the differences has to be identified, right? That's the important aspect. Okay, so that's the monitoring, actual versus potential cost. Usually, the higher actual cost is represent the higher portions, higher wastage, low yield, unreported loss of sales, and non-adherence to the standard policies. And lower sales represent smaller portions and not adhering to the quality standards, which is not also good for the image of the hotels. And then there is usually a menu engineering report, which is we are going to touch very quickly. So we have it helps to understand the best-selling items, profitable items, popular items, and profitable items, and not profitable items. Uh, so this is an example of how we calculate that. For every item, we calculate the popularity based on the number of quantity sold. So we check how much total item we are selling, what is the average. So the formula usually is to get the popularity index by n divide by the number of items. So it's 12 items. So total 925 divide by the I think 12 divide by 80%, and then based on that you will get the percentage of the items. And then more than that, if let's say the menu popularity factor is here 6.7%, 100% divided by number of item, which is 12 into 80%. So 80% means that we want to cover the top 80% items, not every item, right? So that's way we can get the popularity index. You can make it lower, then more and more items are going to be less and less items are going to be included in the popularity index. So every item is going to be high or low compared when you compare with the 6.7%. And then you take the average profitability of the item. So average profitability here is 4.16. which is calculated by total profitability divided by the number of items, right? And then you are going to take check what is the individual profitability from item F. So if F is greater than the average item profit, then it's high profitability, otherwise it's low profitability. So then you can categorize them as a star, or as a challenger, or as a workhorse, or cow, or a dog. The names are not really important, right? So you have to understand what are the popular and profitable items, what are the popular item but not profitable, what are the profitable items but not popular, and what is the fourth category, no profit, no popularity. So normally you have to change them. So there are usually the suggested strategies that we encourage the hotels to do. So for popular items but with low margin, you have to do the portion control, you have to do the recipe engineering, you can combine them with the another low cost items or more profitable items. You can make a like combo packages. For example, like McDonald's does it with the burgers and the Coke, right? And then you adjust the prices basically. So not popular items are usually we give them, but if they are more profitable, you can afford the upsell incentives or selling incentives, and you can do some promotions to boost the sales. Make them item of the day, or make them give them discounts, entry discounts, or some other promotion, right? So the most profitable and most popular items, we keep them in the quality and use them as a signature dish for more promotion, so that more and more sales included. And then combine them with the packages of maybe other non-popular items, so that the guests are kind of accepting the non-popular items as well, together with the more popular items. Less popular items, just remove them from the system. Break-even point is basically to cover the fixed cost. So it's a pretty simple formula. You have to calculate the contribution price minus the direct or indirect variable cost, and then you just calculate the break-even point by fixed cost divided by contribution, right? So fixed costs need to be the same period, means it's either monthly, or you have to compare them into the monthly as you are calculating the period of break even. And all the indirect costs are not able to be identified, so you have to use reliable measure. And certain costs are semi-fixed, so you need to split up the major cost and put them into direct and indirect, put them into the contribution and also in the fixed cost, and use the fixed cost, use the standard cost. You cannot use the actual cost for this. Okay. And then lastly is the cost controller checklist, which you can access. I will share the PDF of this file, the slides, so that you can take a note of these things and cost controller checklist. So that's the cost control really. Do you have any questions on this?
No, I
No,
think
sir.
I'll go through it one more time later when you upload the recording,
Yeah.
because I've not gone in so much detail into this department. But
Hmm.
yeah, I'll have a second look, and I think that will make it firm.
Okay. Okay. Sure. I will be uploading the